Hello, today we are solving May 2022 Unit 2 IAL paper question number 2. Cumbria Coal PLC has bought land that contains deposits of coal that will be mined. The land is expected to produce the coal for 5 years and the land will be sold. So some following information is available about this land. Okay, so the initial cost of the land, then what is the depreciation and the sale they will get from that land. The first part is calculate the net cash flow for each of the 5 years of this project. Okay, so calculate the net cash flow for each of the 5 years of the project where they are going to mine the coal and sell the land. So let's calculate this. This is about the net cash flow. So the net cash flow is equal to cash inflow minus the cash outflow. So the cash inflow is going to happen through, so let's write the formula here. So the cash inflow is equal to revenue minus revenue. So the cash inflow is through the revenue and cash outflow is through the running costs. So the cash outflow is through the running costs, and this will not include depreciation because depreciation will not involve any cash transactions. So we have to calculate the running costs for this purpose. Okay, and but it will not include the depreciation cost because it's not going to involve any cash transactions. So net cash flow is found by cash inflow minus cash outflow. So let's write for all the 5 years. So this is for the years 1 to 5 in which they are planning to mine the coal and sell the land. So for the year 1, let's understand what are the cash inflows and cash outflows happening. So let's write year cash inflow, then less cash outflow, and then you have to write the revenue, okay, which is and then you have to write net cash flow. So now let's look at the following information. The initial costs involved. Okay, this project is for 5 years. So let's write the years first. So first year, second year, let's understand what is the cash inflow and outflow for the first year. Second year, what happens? Then third year, what happens? Okay, then fourth year, we will have to find what is the net cash flow happening in the business. Okay, and then from fifth year. Okay, so these are calculated and then certain calculations are carried out. So for project appraisal, so the following information is available. Initial cost in buying the land and equipment for mining are 3 million. So this is the initial cost involved in buying the land. So this is some cash transaction happening. So this is cash. Okay, so initial investment. Okay, this is coming under the initial investment. So this represents initial investment in the land. Okay, and it is bought. Then from years 1 to 5, let's calculate the revenue that's happening from the sales. So in years 1 to 5, sales will be 310 tons of coal per week at a selling price of 60 pounds per ton, and there it is said that the land and equipment will be worked for 50 weeks in the year. So they have given, so 310 coals per week are mined and they are sold at the cost of 60 pounds per week, and this is done for 60 weeks. So let's calculate the revenue which represents the from which the cash inflow is happening. So the number of tons mined, okay, into the rate. So the number of tons mined is 390 tons per week. Okay, 390 tons per week, and it is sold for 60 pounds per ton, and this is being done for 50 weeks. So into 50, so that is going to be equal to the revenue. So in 1 week they are able to mine 320 tons. So in 50 weeks they will be able to mine 390 into 50, and this is being sold at the rate of 60 pounds. Okay, all this quantity is being sold at the rate of 60 pounds. So now let's calculate 390 into 50 into 60. So that is going to be equal to 1170,000 pounds. So So 1170,000 pounds. So this is coming from the revenue, okay, year on year. So every year they are going to mine 390 into 50 tons per year, and they are going to sell it at the rate of 60 pounds. So every year the revenue is going to be the same. So let's write it here, 1170,000. This will be the same revenue forecast which is given year on year. But in the 5th year, they are saying that in the last year of the year 5, the land and the equipment will be sold for a cash of 500,000. So let's include this cash, okay, inflow. So let's so they will be sold and they will be getting some cash back, and for years 1 to 5 running costs are expected to be 19 pounds per week. This represents cash outflow. So in the 5th year, apart from the revenue, they will get back the land which has been sold from, and they will get some cash. So that is going to be 500,000 pounds. So let's calculate the value. That is going to be equal to 1170,000 plus 500,000, that is going to be equal to 1670,000. So 1670,000, okay, is going to be the cash that's going to inflow into the business. So let's write that. Now let's write what is the cash outflow. Okay, so in the year 1 to 5, let's write what is the net running cost. Okay, it is said that so depreciation, okay, depreciation is equal to initial investment, okay, minus the resale value, okay, which is what value you are going to sell it back. So we are going to take the initial cash investment in terms of depreciation, because this value which is invested is not immediately, it is assumed I am going to spread out, right? So this depreciation value I am going to remove from the running costs, okay, involved. So it is equally spread out. The initial investment is going to be spread out in terms of depreciation. That's why it is not directly written as cash outflow. Okay. Instead, we have something called as depreciation. So where the investment is spread out over 5 years. So the initial investment of 3 million pounds minus it is sold at the value of 500,000. Okay, 500,000 and divided by 5 years. So the depreciation cost involved is the same as which is the the investment is spread out, okay, and said I am using it for the maintenance cost or the deterioration of the asset, okay, is considered, because the investment whatever you have given, okay, the asset you have gained, it will keep depreciating, so you will use this. So every year you are going to depreciate a cost of around 500,000 pounds. So 500,000 divided by 5, it is going to be spread over 5 years, and 500,000 is depreciated, okay. The asset value decreases over a period of time due to deterioration. So this factor is considered, but in cash outflow we will not consider this depreciation because it is not a direct cash, and also the initial investment is not considered because this has gets included as a depreciation, okay, in the profit and loss. So running costs, okay, each year is going to be equal to 19,000 per week, okay, 19,000 per week, and this is they are going to mine for 50 weeks in a year. So 19,000 into 50 weeks in the year, that's going to be equal to, let's calculate the total running cost which has even the depreciation amount, okay. They have already included in the running cost, they have added the depreciation value of 500,000 pounds, okay. So now the value is around 950,000. So 19,000 pounds into 50 weeks is 950,000 per year. Out of this I have to remove depreciation cost because this is not a cash transactions. So the cash outflow is going to be actually running cost, the total running cost minus the depreciation. So that is going to be equal to 950,000, okay, 950,000 pounds minus 500,000 pounds. So the amount they had given already includes the depreciation along with the other expenses for which cash has to be paid. So 950,000 minus 500,000, so it is equal to 450,000 pounds. So this is the running cost, okay, and all these costs are paid in cash, okay. So that's why you are going to write 450,000, okay, which is the cash outflow that's going to happen from the business. So cash inflow through the revenue and sales, and cash outflow which is a running cost which excludes the depreciation and which has taken into consideration the initial investment of the cash outflow, okay. So you are going to write 450,000 as a cash outflow each year that happens, okay, it remains the same. Now let's calculate the net cash flow. So the net cash flow is cash inflow minus outflow. So 1170,000 minus 450,000, that is 720,000. So let's write 720,000. It will be the same until 4 years. For the 5th year, it is 1670,000 minus 450,000. So that value is going to be equal to, okay, it's not 720, so 1670 minus 450 will be 1220,000. So this is the net cash flow that is happening each year, okay. In the net cash flow you should remember depreciation cost, you will not remove it, you will remove it, and the depreciation cost will always take the initial cash outflow that happens in the business, okay. You are going to spread that initial cost investment, okay, over the 5 years and depreciate the asset. So this will not be included and shown in the net cash flow. Then the payback period for the project,